Radhakishan Damani wasn't born with a silver spoon in his mouth. His story doesn't start in the corridors of elite schools or Ivy League colleges. It starts in a modest one-bedroom apartment in Mumbai, India's financial capital, packed with dreams, humility, and the subtle scent of ambition. Damani was born in the 1950s in a Marwari family known for its natural flair in business. But unlike many of his peers who started family businesses early, Damani was a different breed, quiet, observant, analytical. His father worked at the Bombay Stock Exchange, and young Radhakishan would listen carefully as his father spoke about stocks, trades, and market behavior. But back then, he didn't plan on becoming a trader. In fact, he began his professional life far from Dalal Street. After a brief stint in college, where he dropped out of a commerce degree at the University of Mumbai, Damani decided to run a small ball bearing business. That's right, ball bearings. Not quite the glamorous start you'd expect from the man who would one day take on global giants like Walmart and Amazon in retail. But it was this simplicity and deep-rooted understanding of traditional business that would later become his superpower. Tragedy changed his course. When his father passed away, Damani was forced to step into the world of stock trading. At the time, he didn't even fully understand how the market worked. But necessity is a powerful motivator. He entered Dalal Street, not with a bang, but with a whisper. No noise, no flash, just pure curiosity. And so, began the transformation of a humble man into a stock market wizard. Damani was never the kind to shout on the trading floor. He didn't believe in flamboyance or wild speculation. Instead, he observed. He listened. He read balance sheets when others read headlines. He understood market psychology better than most. He was like a chess grandmaster, thinking 10 steps ahead while others chased short-term profits. One of his early strategies was short selling. At a time when everyone believed in the endless rise of stocks, Damani bet against overvalued companies. In the early 90s, during the infamous Harshad Mehta bull run, while most traders were swept away by the euphoria, Damani stood calm. He saw through the hype, and he bet big against Mehta's manipulated stocks. It was a risky move, but Damani wasn't reckless. He was calculated. When the Harshad Mehta scam unraveled, billions were lost. Fortunes were wiped out. But Damani? He walked away with a fortune. He had shorted many of the artificially inflated stocks. While others were devastated, he was silently building wealth and a reputation. But here's the thing that makes Damani special. He wasn't greedy. While others flaunted their new wealth, buying cars, villas, and watches, Damani stayed low-key. He wore white shirts and white trousers. Always. No designer labels. No show-off. His lifestyle became a trademark. Simple, clean, distraction-free. People in the stock market started calling him Mr. White and White. They didn't know much about him, only that he was a genius who didn't speak much. Yet, when he did speak, people listened. Rakesh Jhunjhunwala, India's most famous investor and often called the Warren Buffett of India, once said, "Everything I've learned about the stock market, I've learned from Radhakishan Damani." Yes, Radhakishan Damani became a mentor to Jhunjhunwala. And that speaks volumes. But Damani was not content with just playing the stock market. No, he had his eyes set on something bigger, something physical, something Indian consumers could touch, feel, and walk through. Retail. And thus began his silent revolution, the transformation from stock market sage to the retail king of India. As the 1990s moved into the 2000s, Radhakishan Damani had already achieved what most stock market traders could only dream of: financial freedom, market credibility, and the admiration of India's finest investors. But Damani wasn't chasing money anymore. He was chasing purpose, legacy, a business that would outlive market cycles and go beyond trading desks. That's when the idea struck. During his years as an investor, Damani paid close attention to businesses that served the masses. He admired companies like Hindustan Unilever, Nestle, and P&G. But it was retail that fascinated him the most. He had observed how foreign giants like Walmart and Target built empires by mastering supply chains and keeping prices low for customers. So, he asked himself, why can't India have something like that? At the time, India's retail scene was chaotic. Small kirana shops dominated neighborhoods, and there was very little organization in the sector. Supermarkets existed, but they were expensive and catered mostly to the upper class. For the middle-class Indian family, value was everything, and that value was missing from modern stores. That's when Damani made his move. In 2000, he launched a small department store in Mumbai under the name DMart. There was no grand launch, no press releases, no media blitz, just a clean, simple store that focused on what Indian families truly cared about: low prices and trustworthy products. He didn't chase footfall through advertising. He let word of mouth do the job. Customers who walked into DMart weren't treated like walking wallets. They were treated like family. The shelves were stacked with essential items: groceries, toiletries, daily use products, all priced just a little lower than the competition. It wasn't flashy. It was honest. But Damani was playing a different game altogether. While others rented fancy locations for their stores, DMart bought its properties outright. That one move changed everything. Owning real estate gave DMart two powerful advantages: cost control. No rent meant lower overheads. These savings were passed on to customers. Long-term vision. While other stores struggled with lease renewals or shifting locations, DMart remained consistent. That built trust. Damani also avoided expensive malls or elite locations. Instead, he placed stores in areas where middle-class families lived and worked: suburbs, growing townships, and densely populated areas. His team studied consumption patterns like a hawk. They didn't chase trends, they stocked what people bought every week: rice, toothpaste, detergent, baby powder, cooking oil, sugar. Simple, repeatable essentials. And customers kept coming back. While other retailers tried to dazzle with lifestyle products and aggressive promotions, DMart stayed grounded. They knew their customer base and served them like clockwork. By the mid-2000s, DMart was no longer a small experiment. It had become a phenomenon. People waited outside stores before opening time. Some compared the frenzy to Apple's iPhone launches, but this was for a bag of groceries. And guess what? Damani still didn't give interviews. He didn't go on TV shows. He wasn't chasing the limelight. He believed in building, not broadcasting. Even within his own company, Damani was rarely seen micromanaging. He hired quietly, trained thoroughly, and let professionals run operations. His only obsession? Discipline. No discounts just for promotions. No flashy schemes. No credit sales. Every rupee had to be accounted for. DMart ran like a military machine, tight, efficient, and focused. By 2010, competitors were trying to understand how this low-key brand was outpacing giants like Big Bazaar and Reliance Fresh. But the secret sauce wasn't in marketing. It was in patience and precision. Damani wasn't building a retail chain. He was building a fortress, brick by brick. And yet, the best was still to come. By the early 2010s, DMart had quietly become a household name in the regions it operated. From Mumbai to Pune, from Gujarat to Andhra Pradesh, middle-class Indian families had developed a deep loyalty to this no-frills retail chain. And still, most Indians, especially those in the corporate world, had barely heard of Radhakishan Damani. He never once appeared in advertisements. He never courted the media. He didn't even have a flashy corporate website. And then came 2017. After nearly 2 decades of building the business slowly and profitably, Radhakishan Damani finally decided to take Avenue Supermarts, DMart's parent company, public. Now here's where things get interesting. Most Indian IPOs around that time were hyped up with media buzz, celebrity endorsements, and loud branding. Avenue Supermarts did none of that. No flashy press conferences. No inflated price bands. Just clean books, strong numbers, and decades of proven performance. Yet when the IPO opened on March 8, 2017, it was like India had discovered a gold mine. The issue was oversubscribed more than 104 times. That's right, investors fought to get a piece of DMart, sensing something big was coming. And they weren't wrong. When Avenue Supermarts listed on the Bombay Stock Exchange, it debuted with a 102% premium, one of the strongest debuts in Indian stock market history. Investors who were lucky enough to get an allotment saw their money double on day one. But beyond the stock price, what stunned analysts was DMart's profitability. While most other retail chains bled money in their growth years, DMart ran lean, mean, and efficient. Their EBITDA margins were higher than the biggest names in the industry. They didn't burn cash, they printed it. And guess who is now one of the richest people in India? The quiet man in the white shirt and white trousers, Radhakishan Damani. Overnight, media outlets began calling him the retail king of India. But to those who had followed his journey from the trading floors to the aisles of DMart, it wasn't a surprise. It was simply the inevitable result of 2 decades of discipline, frugality, and long-term thinking. But here's where it gets even more compelling for your American listeners, Vicky. At the time of the IPO, DMart had only around 120 stores. Compare that to the thousands owned by Walmart or Target. And yet, the valuation per store was among the highest in the world. Why? Because Damani had cracked the holy trinity of retail success. Operational efficiency, every DMart store turned a profit. Yes, every single one. Customer loyalty, Indians came not just for deals, but for trust. Real estate ownership, the land DMart stores stood on? But not least, that meant rising asset value alongside business growth. It was like Warren Buffett had built a retail chain in India, slow, steady, compounding wealth while the world chased short-term trends. Buffett often said, be fearful when others are greedy and greedy when others are fearful. That could easily be Damani's motto too. He waited years before expanding. He avoided burning money just to gain market share. He kept things simple. And the result? By 2020, Radhakishan Damani's net worth crossed $15 billion. He became India's second richest man, just behind Mukesh Ambani. All this without ever giving a TED Talk. Without launching a podcast. Without any social media presence. He built his fortune the old-school way by solving real problems for real people and doing it better than anyone else. But Damani wasn't done yet. His empire was growing. DMart was expanding across new states, hiring more people and upgrading its systems, all while staying true to its original DNA. The Indian retail war was just getting started. After the blockbuster IPO in 2017, most entrepreneurs might have been tempted to shift gears, expand aggressively, ride the hype, cash in on valuation. But Radhakishan Damani wasn't most entrepreneurs. Even with the country watching, even with analysts raving about DMart's operational excellence, Damani didn't change his rhythm. He continued building just the way he always had, slow, careful, and quietly brilliant. In the following years, while competitors like Big Bazaar, Future Retail, Reliance Fresh, and even global players like Amazon and Walmart, via Flipkart, invested billions into retail warfare, DMart stuck to its old playbook. What was that playbook? 1. Never lose money on a product. DMart refused to sell flashy goods just for the sake of discounts. Everything in the store was selected for volume and necessity. 2. Own the land. Always. Damani's team spent years scouting the right property before opening a store. They didn't chase trends, they chased foresight. That meant investing in places where people would move tomorrow, not where they already were. 3. Serve middle-class India. While others tried to impress the elite with premium stores and imported goods, DMart stayed rooted in middle India's needs. Clean rice, quality toothpaste, value-for-money detergents. And the results spoke louder than any marketing campaign. Between 2017 and 2021, DMart nearly doubled its store count. It expanded beyond Maharashtra and Gujarat into South India, Central India, and eventually Northern India. Every new city where DMart arrived saw record footfalls on day one. People stood in line, not for fancy gadgets or giveaways, but for household items at fair prices. It was the retail version of a pilgrimage. One surprising thing, despite becoming a multi-billion-dollar empire, DMart stores didn't really change their look. No digital screens, no piped-in music, no towering aisles, just clean floors, good lighting, and the same reliable shelves stacked with staples. It was almost as if Damani didn't want his stores to feel like businesses, but like trusted family shops, scaled up for the 21st century. His humility even extended to management. Unlike flamboyant CEOs who plaster their images on every press release, Damani stayed in the background. When employees were asked about him, many said they had never even seen him in the office. Yet his principles guided every decision. And here's something that would resonate strongly with your American audience, Vicky. While Amazon was redefining digital convenience and Walmart was battling with online expansion, Damani's DMart focused on the physical experience. It believed that touch and feel still mattered to Indian families. Of course, DMart couldn't ignore digital forever. In 2020, right as the COVID-19 pandemic shut down physical retail across India, DMart made its long-awaited move into e-commerce with DMart Ready, an online grocery platform. But true to form, it launched quietly in limited cities with zero hype. They didn't chase traffic, they chased profitability from day one, even in digital. Unlike other startups burning millions for market share, DMart Ready stuck to essentials only and offered pickup options from designated locations. It wasn't sexy, but it was smart. The result? While other companies slashed jobs and shuttered stores during the pandemic, DMart remained profitable. In fact, its stock surged, making Radhakishan Damani even wealthier, placing him alongside the world's richest retailers. But even with billions in the bank and stock tickers flashing his name, Damani continued to live a simple life. Still no media appearances. Still no flashy suits. Just white shirt, white trousers, and silence. A billionaire who didn't flaunt. A businessman who didn't boast. A retail tycoon who'd rather listen than talk. And in the shadows, he was doing something even bigger. He was mentoring a new generation of investors, people like Ramesh Damani and Ramdeo Agrawal, teaching them the long game. He didn't just want to win at business. He wanted to build a culture of long-term thinking in a world obsessed with short-term rewards. By 2023, Radhakishan Damani had done something that few people in India or anywhere in the world ever managed to do. He had built a retail empire, stayed debt-free, stayed profitable, and stayed invisible. While many Indian entrepreneurs used social media to build personal brands and court public attention, Damani remained the silent architect behind a booming business. He didn't speak at conferences. He didn't sit on TV panels. He didn't even publish a book. And that's what made his story all the more magnetic. Because in a world where everyone seems to be shouting, the quiet man in white clothes became a legend simply by doing the right thing over and over again. And his impact stretched far beyond the aisles of DMart. Radhakishan Damani's legacy is deeply philosophical, and that's where the story hits home for your audience, Vicky, especially American investors and entrepreneurs who've grown up admiring people like Warren Buffett and Charlie Munger. In fact, Damani is often described as India's Warren Buffett, and not just for his immense wealth or investing acumen. It's because of how he thinks. Let's break down what makes him so admired. 1. Long-term thinking in a short-term world. Damani's approach to business and investing is the exact opposite of today's startup hustle culture. He believes in patience, discipline, delayed gratification. While others look to 10x overnight, Damani looks to compound over decades. And just like Buffett, he sees money as a byproduct of value creation, not the end goal. 2. Build what people actually need. Unlike Silicon Valley, where new startups often create problems just to solve them, DMart simply focused on what Indian families already needed: groceries, daily use items, basic household goods. No fancy tech. No disruption for the sake of it. Just consistency. He often says, give the customer what they want and keep doing it better every day. It's that simple. 3. Empowering the retail worker. One underrated part of Damani's legacy is how he's created thousands of jobs in India, not just for tech grads or MBAs, but for regular people. Store clerks, cashiers, warehouse workers, DMart offers them stability, fair wages, and dignity. In an age where automation threatens jobs, Damani's business model still believes in human capital. He isn't just building stores, he's building livelihoods. 4. Humility at scale. Here's a man who could live anywhere in the world, fly private, and dine with kings. And yet he chooses minimalism. He continues to live in a modest apartment in South Mumbai. He doesn't indulge in celebrity parties or billionaire clubs. His closest circle remains his family, a few trusted friends, and his team. And that's the core of Radhakishan Damani's magic.